We talked about the strength difference. When one in the pair is going up, the other in the pair is going down. So there's that fluctuation, there's that change. How do we calculate that change? That fluctuation is calculated using a certain measurement called a pip. So that introduces us now to the next thing in our lesson here, and I know that you're going to understand this, and when you understand this, you will have now understood the pairs, and you will have understood the measurement. So a pip, PIP, pips, a pip is an acronym for percentage in point or price interest in point. Now, a pip, it is the smallest whole unit price move. That movement of price we're talking about between the stronger one and the weaker one, that change, okay, is what we're saying is measured. That small whole unit in the rate, okay, is what is called a pip according to the forex market convention. So the forex market as a whole understands what a pip is, so that a pip is not $1 or 1 yen or you will understand it's a certain value that is understood by the forex market, and you will understand it too. So most currency pairs are priced out to 4 decimal places, and a single pip is in the 4th decimal place. That is 1/1000th. Okay. For example, the smallest whole unit move of the USD with the Canadian dollar can make, or rather, very minute values, that small value, which is the 4th decimal point. You will ask me, Vincent, where is it in my platform? Where can I find the pip? Where can I find, what is that pip? Let me show you. Let's move over. Let's move over quickly to the trading platform. And when you're in a trading platform, over here on the left, you're seeing there's, like now, this is the British pound versus the US dollar. You will notice that there's a 1.21361, okay, number here, or rather, the digits here. Now, 1.2136, the 4th here, okay, the 4th here is the one that changes value, and when that movement is what we call first and foremost, you have a pair, and we've seen the major pairs. We've seen the pairs as they are. Then we've come over and looked at something else. We've looked at what a pip is. A pip is that particular unit. And now I want us to, when we said it's a thousandth, okay, it's 1/10,000th. Okay, so it's 0.000, the fourth decimal. Okay, so we're getting it. So a pip is the smallest whole unit price move that an exchange rate can make based on Forex market convention. Most currency pairs are priced, we've read that, and I've shown you the example, even where the whatever is concerned. I've shown you an example with the platform. Now a single pip is in the fourth decimal place, like we saw. So this here, 0.0, the one here is the, when this moves to 2 or to 3 or to 4, that's a pip. If it moves down, for instance, if this was 2 and then 0.0000021 and it moves to 3.1, now that's 10 pips that have gone up or down, whatever the case would be. So going on to study a little more, there's something smaller than a pip. It's called a pipette. A pipette. Fractional pips are smaller than pips. Okay, it's a smaller pip, and thus a more precise measurement. They appear as a superscript numeral at the end of a quoted exchange rate. A fractional pip or pipette is 1/10 of a pip and a digit after the pip or the fifth decimal. Don't worry about this. What we are saying is, if you come to the trading, what is this? When you come to the actual platform, let me see. Let's go back here. Let's see how we do this. I think there's a way we can stretch. Somewhere here. Transform. Fit the screen. Okay. All right. Let me see how. Okay. Anyway, I can come to. Let me just see whether you'll be able to view. I think you can. If you look at the digits here, we're looking at 1.2130. There's another number, another digit here, small digit that is still moving there. That's a pipette. And when that one pipette goes from 1 to 9, it moves the pip. Okay? So that's a more minute, but we don't consider that when we're doing the trading, when you're in trading. What we consider is the pips. The movement of the pips is what is considered. So let us keep our mind on that's what is considered. That's what matters. It is the pip, the fourth in the digit, not necessarily the fifth, the fourth. So pipette is it does have a bearing, but we don't consider it because it's a very small then the pip value good as a pip. Now, movement and these pips and these points that we talked about the fourth. That's the fourth, the fourth decimal, the pip. Let's see, there was something here, the position here. I could have skipped and I could have forgotten this, and let me now take this chance to clear it. There's an exception on the yen. The Japanese yen is not the pip for the Japanese yen is not looked at like the pips of all of the other currencies. These other currencies, it's a fourth decimal place. That's a pip. When it goes up, we say uh, there are 2 pips higher, or if it goes down, 2 pips less, or 3 or 5 or whatever. But for the yen, the pip is the second decimal point. So if we were to quickly just go into our trading platform here, 140